There are many people that think that after we break through 67.5, and we were just there actually not too long ago. I think we actually hit it a day ago. But there are people that are eyeing certain levels and believe that, hey, afterwards, we are going to not only break our previous high, but head to a next leg up, which could be around $80,000, $90,000. And this analyst thinks that, hey, this could spark a new high because if you're looking at the futures data, and more specifically, where people are going to get liquidated, if Bitcoin breaks 66.5 and continues higher, you will have hundreds of millions of dollars of shorts liquidated. And that is going to cause a short squeeze and will drive Bitcoin even higher, right? But right now, you can definitely see there are a lot. Okay, this actually surprised me. There are actually a lot more short leverage right now at this point in time than long leverage. Okay, and the higher we go, there will be more and more and more short squeezes, and no one will shed a tear because everyone hates shorters. Okay, if you don't believe in Bitcoin, sell out, but why short Bitcoin? But it's actually surprising. There are a lot more people shorting Bitcoin at this point than longing Bitcoin. And that is not the right way to do it. And if they all get wrecked and liquidated, like I said, no one will care. So that's a big reason why, as we move higher, and if we actually do move all the way to 70,000 and 73,000, our previous high, it will absolutely wreck every single shorter out there because most of that volume seems like it's right between now and 70,000, which means we can fly past and head to 73 and form the next leg up after all these shorts are gone. Another one, I mean, if you're looking at another technical chart, I mean, it's basically showing that we are going higher. Okay, it's hard to read, but yeah, we had our dip. We are getting ready to go higher. And if we close above a certain level, in this case, this person thinks 65.4 for this week, we are going to go higher. Also, another thing to look at this week, and I mentioned this in my Sunday walk video, which is pretty obvious, but the ETFs. The ETFs are now accumulating once again massively. As you can see, after having so many good weeks, then we started having some outflows, which is no good, led by Grayscale. Week 14, 15, 16, 17 looked like it was a growing trend. Then week 18, we flipped. Week 19, which was last week, absolutely fantastic, added over $1 billion worth of Bitcoin. Will we see the same thing this week? I think so. There's nothing stopping it. There's nothing stopping the ETFs from accumulating more Bitcoin as more and more FOMO builds. Okay, that's the major reason. I mean, when you have $1 billion+ of Bitcoin being bought and being put into these ETFs, taken out of circulation, that's going to drive prices higher. It's really hard to counter that. Is there any entity out there that could sell hundreds of millions per day or even $1 billion a week? The answer is very, very, very little entities out there can do that, right? So this is a big reason why. And you may be thinking, well, why is everyone FOMO into Bitcoin ETFs? Well, besides the obvious, because of inflation and all the government shenanigans, that's driving a whole lot of people, funds, even private company, public companies, pensions, family offices. I mean, the list goes on and on and on. Even banks, some of the major banks have bought. But if you look at if you discount everything else, if you just look at it from a performance standpoint, and I've always said this, nothing ever outperforms Bitcoin long term. So if you look at just, hey, even if you didn't believe in Bitcoin, you didn't believe it was the best hedge against inflation, just look at the performance. Okay, if you were looking to buy an ETF and you're like, okay, well, where should I put my money into? Should I just buy something that encompasses all of the S&P 500, which traditionally speaking isn't bad? Sometimes the S&P 500 does very well within a single year, right? And you can see on the top, you got a lot of ones covering S&P 500. You got some that's covering NASDAQ 100 or Russell 1000 or mid cap, small cap, international. I mean, there are a ton of ETFs you could put your money into. But do they compare to the performance of Bitcoin ETFs? The answer is no. So again, when you're going to invest in something, generally speaking, you bet on the fastest horse in the race, right? Especially in a bull market, which we know for Bitcoin it is. And for this year, a lot of people know it's a presidential election year. It's going to be good. So, I mean, S&P 500 hasn't done bad. 12% year-to-date performance, that's not bad. But compared to the Bitcoin ETFs at 44%, it trails by 4x. Bitcoin has outperformed it by 400%. And what about precious metals? What about gold and silver, right? A little bit better. Look at gold shares, gold trust, silver. You know, they're okay, 15%. But again, compared to 44%, yeah, it just trails. And here's another thing I didn't talk about real quick. But if you look at assets that these funds hold, some of these guys, they're holding they're holding crazy amount, right? You look at assets versus how much the Bitcoin ones have, so little. So that means the amount of money out there, just even if like a 10% of the liquidity came out of the other funds and went to the Bitcoin ETFs, that would already drive another, 5, 10, 15, 20 billion, I can't even do the math, into Bitcoin. I mean, that's just a small amount. And the funny thing is, I hate to nitpick or pick on some of the other precious metal, but I saw today on X, one of the major categories is precious metals soared to new heights. Okay, driven by a combination of factors, including anticipated U.S. interest rate cuts, geopolitical tension, increased demand from central banks and consumers. Gold hit a new high of $24.50 per ounce, and silver climbs to a level not seen since 2011, right? Which is probably the reason why the gold and silver ETFs have done well year to date. But compared to Bitcoin, no. And here's another chart of gold. And gold has broken out. 2450, you could see. It was stuck around 20,000. Oh, no, not 20,000. 2050 for a long time. And it was also around 1900 back in 2011, 2012. So, yeah, it has broken a new high. But if you look at the performance since 2011 till now, that's 13 years to go from basically 1900 to 2500. 13 years. So gold is not a good asset to hold if you want gains. That's the bottom line. You want to hold the fastest horse in the race, and that is Bitcoin.